All right. Hope y'all had a good weekend. Let's get right into it. I didn't do any sort of analysis over the weekend. So let's just get into. I mean, we have a few days worth of stuff to go through. So it looks like I don't remember what these lines are that we drew, but it looks like they were somewhat mostly respected throughout the weekend, which began when the 29th is probably the last time I did something. 29th around 5 p.m. Right here. This is probably the last candle that I did. So all this has happened in the last couple days. Let's just clear up the chart and let's just start from scratch. I know we just cleared up all of the everything that I've ever done on this chart, but as you can see, it's all down here. I haven't done anything on this chart since 13K it looks like. So it's all good. It's nice to keep a fresh chart sometimes, you know. So let's get rid of all that. Okay. We can start with the daily and work down. I mean, we had a monthly close, we had a weekly close this weekend, so we can just start at the top and work to the bottom. So monthly close super strong. Um, I mean, we had a very strong monthly candle anyway, right? Took a new all-time high, but we closed pretty decently. Highest close we've ever had. So that's pretty strong. Prior highest close was about 58.8, it looks like, and this time we had a close at 61.3, so that's quite good. Um, Getting ready to see what this bar could do. Could it pop all the way down here? Yeah, sure. Could it pop even higher? Sure. One of the things that one of the fractals that I've been looking at has been this FTT weekly chart, and this is kind of what I had been looking at. That we had this dump, bounce here, double bottom pullback, almost looks like a triple bottom. Wouldn't really call this a rounded bottom, but you know it's a bottom for sure, right? And then sharp rally, barely any bearishness. I mean, these are two inside bars, consolidation, kind of a triangular consolidation, and then a big breakout to a new all-time high. Does not quite close at its high, but closes higher than any other close has ever closed. And then the subsequent candle was pretty much all buying to an even higher all-time high. And because it happens to be around the same area, like this is $60 was the $62 the prior all-time high, and then this all-time high took it all the way to 70. That's kind of one of the things that prompted me to think when we took the all-time high last week or the week before that we might just go straight to $70 and then kind of come back, revisit, and then go up, because the kind of what we've been looking at on Bitcoin has been pretty similar, right? We have this all-time high, this rally, this run it back here rally, and maybe we want to put this on a weekly chart so it's a little bit easier to see, but we have the same kind of thing. Double bottom pullback, not quite a rounded bottom, but a three push down bottom, sharp rally, not much selling off. I mean, this looked a lot stronger than the consolidation on FTT, right? Like, I think there were a lot of people who were definitely like, yeah, we're about to dump from here. No reason to, you know, believe that it couldn't happen after everything, excuse me. So everything we saw in this region, all this consolidation up here, only to dump. I think it was somewhat reasonable for people to think, yeah, this could be the start of another leg down, like a 1, 2, another leg down into this 20K region, maybe at least down to this 30K region. But this was a really strong buyback bar, and from there, bulls never really let go. Um, and then same kind of thing, we pushed up to an all-time high, and now we're stalling, and let's see what the next step is. I do think we're gonna try and take a push at a new all-time high. I'm not sure if we revisit the mid 50s first, because it's not looking so amazing on the lower time frames, but let's get to them and check them out. So on the weekly, excuse me, I mean, I wouldn't call this a sell signal necessarily just yet. This was so strong, right? This pump here, 60% pump, Jesus, 60% pump, all strong marching bull trend bars, and then we just had two quick legs down, and then resumed the buying, which was pretty much the same thing. Not quite a 60% move, but this was 22K move, and this was 27K move from bottom to top. So probably 20K move from body to body, 22K move from body to body type thing. This was like a reversal bar technically, but it closed, it closed pretty much at the high, at the close of the old bar, the prior bar. So not super bearish, I wouldn't say, but it's certainly first red bar at new all-time high. Bears are going to trigger, right? People are going to sell. So a lot of profit taking in this candle, maybe a little bit of selling, but I wouldn't say too much because it isn't a sharp, strong red candle. Volume wise, for an all-time high candle, I wouldn't say it's particularly voluminous. This subsequent bar triggers the short from this point down to here, and then buys it right back. Doji, 2 weeks straight of doji. So clearly setting up some sort of maybe range in this region kind of thing. And, we're currently respecting this trading range, but it is also consolidation. More importantly, right? Like this is a trading range occurring where? At the top of this strong move, right? We have this first strong push and then consolidation near the high. Usually there's going to be some sort of continuation. But when it's this tight and this doji-esque, a lot of indecision, a lot of balance in the market, bears certainly could overwhelm the bulls, especially after two nearly equal length moves. But the reason I'm not inclined to think that bears are going to take over anytime soon, and if they do take over, I don't think they get too far. Like I think they get to mid-50s kind of thing. I don't think they're really necessarily getting all the way back here to the 40s. That's just because two legs up to a new high, to a new all-time high, and then rejection. If they're able to follow through, they might get a little bit of something going. But I think that certainly these three candles are so strong that there's going to be a lot of buying. There are going to be a lot of buyers in these areas below. I don't think the sellers continue to overwhelm buyers all the way down here. I think there's going to be buyers in this region. I think if we can break through this region, I think there's going to be buyers like in this region, right? If we can break through this, we're going to have buyers down here. But at that point, I'm not sure, if buyers are going to be super excited when we come back to the midpoint of this move after taking a new all-time high. I would think that point, I would think that if we get to a kind of, see how steep and strong this October bar is. It's not so. If we come down like this, it doesn't have to be like, it can be in a straight line here, right? Like we just come straight down and we get to this point, I would be leaning, maybe it could be 50-50 at this point that we just go up, or it could be, just continuation down. Maybe like a slow grind over many, many months kind of thing. We'll see. So now let's get to the daily. Let me remove all the drawings. These indicators I don't really use too much. I definitely don't use the MACD. I never use the MACD, to be honest. I just put the MACD and the RSI and the MA on because of, my OG Philicon, who, was instrumental in me deciding and learning to trade in the first place. And he is a big fan of MACD. I never really used it. RSI I used a little bit, and sometimes I'll check if I'm having a tough time kind of looking at a structure and being like, is there a lot of momentum? But usually I can tell. Usually you can just tell based on the price action what the RSI is going to be. So not really too worried about that. Mostly just use this chart. And sometimes I even turn off this EMA, So let's check out the daily. Daily, obviously, we had the break in this structure. This was the first test. So when you get this break initially, right? You're immediately looking for a retest. We're looking for two minor legs down. Here's one leg, and here's a second leg, and then you're immediately looking for a retest. This retest didn't do anything. right? We weren't able to get back higher. And if we take it on an even lower time frame, there's a retest on this candle as well. And if you remember, I traded this one pretty miserably. Made like a couple $100 off of it, but kind of shouldn't have because it was pretty nasty. But anyway, that retest failed. Then we get this retest. When this retest fails, now we're looking for a second leg down, and then we're going to put in yet another retest. So effectively, what we're looking at is this super strong retest fails, puts in another leg down, retest, fails, puts in another leg down, and then retest. So now you have one leg, retest, two legs, fails, puts in another retest. Now this whole thing is one leg, two legs, puts in a new retest. If this one fails, now this whole thing becomes one leg, and you put in a second leg down. This is kind of the way that the markets are going to go, right? So we've seen one retest failed here. Second retest now has failed here. And now we're looking for a second leg down. So now we have two legs down. And now this is a strong outside up bar that happened a few days ago. And looking for yet another retest. That retest can't even make it to the high of this prior retest before looking like it fails. Now, last night we had this pump up, and this is actually an outside bar. Today's bar is an outside bar. And for a minute, it was looking like an outside up bar. And interestingly enough, this was kind of one of those situations where one leg down, two legs down, starting the second push upward on this super strong looking outside up bar, potentially making a move to the high, or at least around 65K area. We have this strong bar follow through, this small inside bar, this small bar that kind of breaks the low, puts in a sell signal, and then this next bar breaks above it. So last night, this bar is a green bar. This bar is a green hammer bar, right near the top. And this is kind of one of those scenarios where when you have a strong move and then you have a two-legged pullback, you start to buy above anything. Any prior bar, you're buying above it. If it keeps going up, you're buying above it. Conversely, if you have this type of scenario here, right, where you start to go down and down, you put stop buys above every single bar and you hope that they hit, because most likely this is the reversal here. This is your high two reversal, high one, high two reversal, and then your high two pullback. And from the high two pullback, you're typically likely to just keep going. So theoretically, and I'm going to tell you why I don't think it ended up working out that way. Theoretically, once we see this and we have this, pretty decent follow through, right? Buyers are looking to buy above every single bar. So they're going to be stop buys above this bar. I mean, obviously there's stop buys above this bar. There will be stop buys above this bar. And there's stop buys above this bar. Well, the stop buys above this bar actually trigger on this. And so I think, eager bulls who are putting their stops above this are expecting we just immediately pump up. So for us to now double back down towards the lows, and I'm not sure how far down we went because I really haven't looked at the chart yet. We're kind of looking at it fresh together right now. I think bulls would be pretty nervous to see what kind of happened here. And I think one of the reasons that I'm not a fan of buying above every bar here is because of how much overlap there is on these kind of 4 or 5 bars, right? These two bars completely overlapping, and then these two bars completely overlapping. Well, if we took this on like a 2-day chart, this is going to be one whole doji here, right? Let me just do it like this. Let me just draw it out, right? Assuming these are the bars that are connected, because 2-day, it could be this one and this one that's connected and this one and this one that's connected. But assuming that these are the ones that are connected, these are the ones that are connected, this is going to be one doji, right? It's hard to do this. Then this is going to be also one doji, kind of closing near the low with a with a spike to the upside. And then this is also going to be a doji that kind of closes right here. Same kind of thing, and has a bar to the upside and a bar to the downside. This is 3 straight dojis. That's a barbed wire, right? And as we saw in the higher time frame, this is almost setting up to be a barbed wire type pattern. Barbed wires, technically, you need 3 dojis. I guess technically this is barbed wire because I think the official definition that Al Brooks gives for barbed wire is 3 bars where at least 2 of them are dojis, or at least 1 of them are dojis. Let me actually look this up. Let me see what I've written down here. Because I just kind of assume anything, when you start seeing a couple dojis, I start thinking barbed wire. So, gosh, I have a lot of information here. Barbed wire is a type of tight trading range that appears when there are 3 or more sideways bars, at least one of which is a doji. So I wouldn't say that this is sideways, right? I wouldn't call this sideways. So I wouldn't call this barbed wire quite yet. But if this bar ended up being the way that it is, then I would start to say, yeah, this is a barbed wire situation. But certainly on the 2-day, we can see how these bars, these 6 bars, right, are kind of a barbed wire situation here. So when you have this kind of barbed wire situation here, now we have to cool it. We have to put the brakes on a little bit about buying above every bar. We have this nice follow-through bar here, but it's almost an inside bar. It barely breaks above the prior bar. And when you have a barbed wire situation, breakouts are very, very, very frequently destined to fail. So we have this kind of breakout here that normally would possibly continue to propel us upward. But because of all of this trading range activity, because it's such a tight range here and bears are selling at the top, let me just explain this. Why I call this a tight range. It's not the tightest of ranges, right? Like it's a 10% range, but it's a range in the sense that up here, after we saw this and after we've seen these 3 barbed wire situations, sellers are loading up shorts here. Sellers are looking to sell here because, like we said, it's a 10% range. So sellers are definitely going to look to sell up in this range, and they're going to look to buy back down in this range because we have precedence for that. We had a strong sell-off here. Bears are likely going to be trying to defend this, their shorts here. From this candle, bears sold here. So bears have gotten short as of, this region, 61,500. So they're going to be wanting to defend the highs. Certainly, there are going to be some bears who have their stops above this bar here. So they're going to be defending this high. We defended it here very nicely, very strongly. Bears who wanted a second opportunity to enter short will have shorted underneath here, right? Thinking that even though this is kind of a barbed wire, I'm going to delete this now. Even though these 3 candles are kind of barbed wiry, pretty sideways, right? Totally sideways. And this bar is, on a reasonable enough proportion of this bar that we can call this sideways and not say that, this isn't quite sideways like we were saying on the higher time frame chart because we basically had a really strong trend bar and then 2 dojis. I wouldn't say that's barbed wire quite yet, but this I would say is more barbed wiry. We had a breakout to the upside and they rejected it, so bears are feeling pretty decent, right? Putting in more shorts down here. Now when we get all of this trading range activity, bears are getting a little bit nervous, but they're just wanting to defend their highs. They're just wanting to defend their stops, right? We had a lower high here. We had a lower high here. We had a lower high here. So bears are still trending in the right direction. I'm going to need to start clearing some stuff off of here. Bears are still trending in the right direction. Right? I mean, they're really trending in the right direction for sure. But they definitely don't want to get their stops run up here. And bulls, recognizing these barbed wire patterns and recognizing this trading range, are going to start taking some profit up here. I mean, if they bought down here at 58, 57 kind of thing, they're going to be looking to take a little profit off the table when they're inside a trading range and they made 8%. So it's only natural to start taking to have some profit taking here. You maybe have some more profit taking here and then a continued pump upward. But, excuse me, because again, we're in this range, which we started over here, but extends all the way this way. And notice, depending on how you want to draw it, you can use these wicks and have current daily bar be in that range, or you can bring it all the way down here or all the way down here, whatever you want, right? You can even extend it to have a little bit more confirmation and faith. But we're not so concerned about everything that happened here informing what is happening now. We're just looking at what's been happening right now. So that's our daily outlook. I think what we're looking at is, especially once this bar goes upside down, and we still have 6 hours, right, to close as an outside up bar. If we close as an outside up bar, maybe we can continue pushing towards the highs of 66 or even higher. But like we said, with this trading range and kind of being near the high of the trading range, especially once we see this come back outside down, I think I need to close this. I'm not sure if this is even audible to you guys, but it's audible to me. It's gonna bother the shit out of me if I don't take measures against it. Just closing my windows. Actually, let me pause it because there's another window to close. Okay, hopefully that's a little better. There's some yard work going on in the neighborhood, so I'm not sure. This microphone, these headphones that I'm using are usually pretty sensitive, like when I'm talking on the phone. So hopefully it's not picking up too much errant noise. But just in case it is, I'm going to try and be a little quicker now here. So this is certainly looking a little bit bearish. You know, bears are getting consecutive bear bars that are getting a little bit stronger. And the bodies certainly have been getting stronger. Of course, this one still hasn't closed. But if it closes any lower or even here, the bodies are getting stronger. The direction is getting more clear and is getting stronger. And certainly, you know, they're going to want to try and start, you know, parabolating, getting this a little bit more exponential, right? So we'll see how this one closes. And I would certainly think that if our next candle breaks below this, we probably are taking a shot at, you know, mid 50s. But that's to be seen. Like I said, we still have 6 hours on this and on this daily candle to see how it goes. So let's break it down to a 4 hour now here. So I'm going to put a mark at the last place that we did a thing for, which I don't think was on this. Was it here? Was it the 28th or the 29th? 29th is the last time we did something. So 29th at, the last thing that I did was at 6 p.m. So we'll do it here. We'll stop it right here. Oops. So everything past this blue line on the right side of this blue line is stuff that we haven't gone over together. So if we just start taking a look at this, I think for a while, right, we were talking about this this bearish trend line that they were kind of forming. Bulls kind of reached that, especially with this strong power move, right? If we redraw, we can still kind of redraw to be like this. Maybe like this is a little better, which bulls tried to break above and now are dumping back below. But yeah, obviously when you start to redraw trend lines, it's not the best sign for you. It doesn't mean that we're bullish all of a sudden, but you know, bears don't want to be redrawing their trend lines. Ideally, you know, the bears got to keep pushing. They want to redraw the trend line this way, not this way, right? So with bulls, we had this trend line. Not really any better way to draw it. I guess you can draw it like this, but that doesn't really. This is just a different trend line that you're drawing now based off of these two lows, but it didn't really house any sort of move, right? Like, obviously we housed the move within this channel, this entire move. Nothing really has happened here, right? Not a great way to draw any sort of parallel channeling. So bulls, because of the strength of this move, are still looking for a retest of the high. But after all of this sideways activity, and let's see how long did it take us to make it from 40 to new all-time high, 21 days. And since that all-time high, it has been 12, 11 days. So a little over half the time that it took to get us from 40 to 67K, we have not even moved 10K. The lowest we've been is like 57.5. I'm not going to find it because, you know, okay, there we go, 57.5, right? And the high was, I think, 67.1 or 67.3 or something like that, 67.128. So 10K. So this is mostly sideways here, and it's starting to, you know, we're not quite rounded yet, but definitely looking to start making kind of a rounded bottom here. you maybe can call this one of the lows, here's one of the lows, here's one of the lows, and maybe call this like a inverse head and shoulders kind of pattern that, you know, if we respect this low here, which is still in play for sure, that maybe we just continue upward, right? That's what bulls might be hoping for. That being said, these last few candles, kind of nasty, kind of not great. Certainly not trend bars. Certainly you're not going to be trading them like it's a trend. If we kind of just take these by the numbers kind of situation, I think pretty clear. One strong leg down, right? That was broken into. You could maybe say it was a 5-legged move if you're going to be. Let me just make this bigger. Kind of like this is just why I don't know why we do it this way. We don't need all of this stuff from behind, right? So if we have it like this, we can maybe say 1, 2. Let me just use these numbers. We can say like 1, 2, 3, 4, 5 respects all rules. 4 doesn't really break below 1. Can even say 1, 2. Then you kind of have like a 1, 2, 3, 4, 5, 3, and then like a 4, and then a 5 here. But the important thing is what we do have is 1, 2 legs down, clearly broken. Clearly this trend line broken with another test down. So this is a 1, 2, two-legged move down. We now have a push back up. Depending on where you started from, you can maybe say like a 1, 2, or you could say like a 1, 2 kind of thing. However you draw it is not important, and it's not even important that you say that it has 2 legs. What is important is that after these 2 legs, we are probably expecting another leg down, and that's what we get here. So now we have these 2 legs down, and like we were saying above, or like we were saying earlier in this video, when you have such a strong leg, when you have such a strong push, even if it's 2-legged, right? If we started here, this was such a strong push that when we push back up here, we expect a second leg down. Well, now this whole thing is such a strong push that when we get another relief bounce, we expect a second leg down. Now this whole thing is so strong that when we get another relief bounce, we expect a second leg down, right? And on it goes, such that now we call this one whole move, and maybe we're expecting a second leg down. So usually when we have this sideways correction, this is going to be a continuation pattern. Well, after this strong leg down, this sideways correction, maybe looking for a continuation pattern down here. Now you might say, wait, LTT, because we had this whole movement up, right? And now this whole thing is a sideways correction of the up move. That's exactly right. So at some point, we're expecting some sort of resolution to the upside. But in the interim, we're not going to rule out the fact that this was so strong and this is a sideways correction of this move. And so therefore, we might have another leg down before we have any sort of up move. Now, what would the bulls like to see if we do have this situation of we're definitely going to have a second leg down? Well, this leg was pretty strong. And ideally, bulls would have liked to see a strong push up and then a second leg that is not strong and gets only back to this area. Ideally even higher. They can't even make a lower low. Some bulls who are a little too eager right now will have said this was the test. This was the second leg and we put in a higher low and now we're going to go up. I'm not entirely opposed to this, but right now with the follow through on this candle, it's just not looking so great. And especially with the trading range activity, this high here, things that we were talking about earlier, maybe bulls aren't going to be so eager to buy up here to send it higher. Maybe they want to let a little bit more time run off, maybe let some more bulls get trapped out of the trade. They see things like this and then they decide, okay, I'm going to cut my trade. And then, they capitulate here and then we immediately go up. And now because those bulls have been taken out of the trade, once we get higher above here and they realize, oh shit, I was right, we are going to keep going up, Now they have to buy up here, they have to buy up here, and they fuel to move higher. That's what bulls are hoping for. Bears obviously hoping to take a shot at these kind of lower regions. We have, price range. We have this move down here from high to low, about $10,000. And so maybe, if they're hoping that we've made a double top here, maybe from here, high to low, another $10,000. I can't draw it all the way, but yeah, that's kind of the idea, right? So, but let's get back to what we were saying. I think it's pretty clear 2 legs complete here, right? Especially when we get this super, super, super strong bull bounce. I think at the time we were talking about possibly 1 leg down, 2 legs down, 3 legs down, and then this is a push up after 3 legs down. So there's a lot of different ways that you can mark the end of this. We have 2 legs down, we have 3 pushes down, we have a seriously super strong reversal bar. We have a pretty reasonably strong reversal pattern that kind of occurs down here and is confirmed with this lower low. When you get a lower low here, you're expecting now 2 legs up. So we have 1 leg here that gets kind of broken here, and then the second leg up. Well, if you want to say this one gets kind of broken here, it's not hard to say that we have this here as well, and that this is just the first leg up, and we get it kind of broken here. I think it's pretty reasonable to say that this area here is the, sorry, it's so fat, but this kind of area here is the correction, right, of this up move here. So if we look at this mini correction, we have 1 push down here, maybe to here, then we have a retrace, second push down here. And how am I defining these pushes, right? Well, we're drawing a trend line. The trend line gets disrespected enough so that you can say that, yeah, this trend line has been disrespected, and we're not really going to redraw it like this way, this way, this way, right? Like, sure, we can redraw it as many different ways as we want to, but it's getting steep, shallower and shallower. The shallower your trend line gets, the less your team is in play. So clearly, if you're going to draw it up this way, we're saying that the bears are not super strong because the bears are getting all the way over here. We're getting all the way down here and then still running it back to the trend line 3%. Not really what you want to see when you're a bear. That's a little bit more indicative of sideways price action because bulls are able to make money. If it's really, truly bearish, you don't want bulls to ever be able to make money. 3% is a lot of money for bulls to make, right? So here we have that second push down, again defined by the trend line gets broken significantly, right? And then the final push down here, that ends our move. Not only is the final push a third push down into what was, I wouldn't say it's really that wedgy. The wedge is more so from the fact that we have 3 pushes and less so from like saying that, yeah, we have a wedge here, right? But yeah, it is kind of a wedge. Super strong bounce up here now. So now this is what we're playing, right? Now we're saying the second leg up has begun, and let's see what type of resolution we get. Bears obviously are going to want to put in, we have this high here. If we put it right here, this looks like a double top. Bears are obviously going to want us to have a double top. Ideally, if we're going to be very technical and put this high here, and then we have a lower high here, bears are going to want to put in yet another lower high here. When this inevitably, because of how strong this bar is, when this inevitably retests this region, bears are going to want to see something like that. In the worst of cases, bears would allow something like this, but bears don't really want to see this region to be taken, because if we go above this region, there's a much higher chance that bulls can be active and that they can start making more money and take us up to the 66K region, which a lot of bears will have their stops in these areas. So they're probably not going to want to let these regions be disrespected because they don't want to have to either A, move their stop all the way up here, or B, take the loss and be in no man's land here without a position. So that's kind of how bears are feeling. And if we flip it here, we can kind of see a little bit better that we kind of have this bearish trend line. Bulls are trying to do their thing, and then bears would like to continue their move. So that's kind of how, that's kind of how it's going a little bit right now. Let's take a look at the 1 hour, shall we? So basically what we're saying and what I'm looking at and what I'm feeling like has happened over the weekend is we've kind of gotten, I'm kind of feeling like I have confirmation now that this is the counter move to everything that happened here. And the only thing that's unclear is, was this done in 2 legs or was it only 1? In my opinion, it was strong enough on this move to consider that even if you made 2 legs up here, that this was just 1 leg and maybe we want to look for a second leg. Now what's unclear now is if this candle right here is in fact the entirety of the second leg. Because it doesn't have to be, right? We have a strong push from here to here, about 10%, about 5,600. Well, this second leg right now is about half that. If we wanted to let it go all the way, 5,600 is around the 65K region. I don't think that's out of the question at all, especially when we see such a strong move like this. So what's really important right now, what I'm really trying to focus on is the most important thing we can evaluate is what's going on here right now. Because if we determine this to be bullish, I think 65K is very much on the table. And if this happens to be just a major failure of this, then I think 55K is very much on the table. Maybe not quite yet, because I think we'll first have to revisit this 58K region. And if we revisit the 58K region, I think it's going to become a whole lot clearer that this is a trading range. And we might get a bounce from the 58K region, almost even, possibly even back up here before we see any more selling to the downside. Probably it would be more so like this, another lower high before you keep going. But yeah, I think that the resolution of this outside bar, and certainly of today's daily currently outside down bar, going to be very important to see how things go. Oops, I wanted to have that bar here to know how to proceed. It's fine, actually. We'll just redraw that bar. So let's hop down to the 1 hour time frame. Oh, sorry. Yes, what I was saying is we have 1 push up, and then here's potential second push up. But I think definitely what has happened is a 3 push kind of pattern here. Somewhat, you can kind of call it a wedge here, but you can maybe even say it's like an expanding triangle kind of thing, where we do kind of have this kind of situation. Kind of not the easiest to draw. Maybe easier to draw with just lines. Like here, and then here. This kind of expanding triangle-ish situation, which would be horrendous if we decided to let the expanding triangle play out and we took a low here and then pumped to the high. Would be crazy. Just because everybody would just be getting trapped and trapped and trapped over and over and over and over and over. But when everybody gets trapped 150 times, it definitely makes it easier to, march to whatever the level is. Because if we have bears getting in here and then getting stopped out above this, and then realizing, no, we need to keep going, and getting back in down here, pushing it down here, getting pushed up here, where bulls were holding this low and thinking we're going to go up here, and then bulls get a push up here, and then the bears take them down even lower, and bulls get stopped out here, and bears are thinking, yes, let's go again, and then immediately all the bears get stopped out, and all the bulls start to push their way back in, and now immediately again, they're getting chopped out again. This is not good. This is not good for traders, right? And eventually, bears are going to be like, I'm done here. I've lost too much money trying to sell. Bulls are going to be like, I'm done here. I've lost too much money trying to buy. And there's only going to be whoever the final capitulants are. And everybody's going to get the clear message that it's time to buy or it's time to sell. Very tricky, very, very tricky to trade and to evaluate, but something that could happen. That's the only reason why I don't like it, because you basically have to get down with the fact that, okay, this is done and this is what I'm seeing now is real, and usually you're waiting for five taps of it. So let's actually go down to a lower time frame. They're usually waiting for like 5 taps, maybe 1, 2, 3, 4, 5. And so they thought, okay, everybody's done here. Now we're going. Well, that wasn't. And we had a 6 and a 7 here. And now we have an 8. Are we going to have a 9? It's possible. Sometimes triangles occur in this many moves. Maybe it's like a 1, 2, 3, 4, 5. Really, really, really difficult to ascertain what specifically your count is. But the count doesn't necessarily have to be that important. We just want to look for good setups to trade. But I'm sure you can imagine, like when you see something like this, you think, oh yeah, if we go above here, we're just going to keep going. But what ended up happening in a expanding triangle will come up here and then shoot it down to the other side of the range again. So something to be wary of, something to be careful of. And again, seeing the resolution of these 4-hour candles and especially this daily candle is going to give us a lot more clear of a picture. But in the meantime, I think what we saw here, very clear 3 pushes down and bulls trying to resolve now. So definitely looking to see how can bulls resolve this this strong spike here. It wasn't with a channel. Sometimes, oftentimes you get a spike in a channel. We didn't get that. Excuse me. We got a spike and a reversal. So this has been going on for about 40 minutes now. So I'm going to use this as the macro, and then we're gonna get down onto the 1-hour chart, and we're gonna start talking about things like this. This being your short signal that has kind of sent us down all this way here, and maybe some higher time frame short signals that are kind of propelling moves right now. So for now, we're going to be done here. What I'm going to say is definitely want to see what the resolution to this daily candle is and to try and get a more clear picture of what's going to happen next. And on the lower time frames, we're going to be looking for a resolution of this spike, because if this spike ends up putting in a second leg that is still lower than all of the stuff, I think bears are going to be feeling a lot more comfortable in their shorts and a lot more eager to add onto their shorts. So we'll look for these the resolution of this spike and our daily outside down bar, and then we'll go from there. All right, thank y'all.